Welcome to the Happy Hour Money Show. I'm your co-host, Isaiah Douglass, joined by the always glowing Josh Bennett. Josh, how are you?
I'm delightful. How are you, Isaiah?
Josh, what do you have to drink this afternoon? Anything, or did you forget?
I forgot. Been one of those days.
It's all right.
I need the happy hour, but I have not gotten to the happy hour.
Yeah. I'm nursing a little bit of a head cold, so I just have water because I think that's best. I don't think you're supposed to mix alcohol in medicine. So from that standpoint, but anyways, today.
We're boring today, but the topic will not be boring.
Yeah. But I'm excited to bring on Sam Callahan. And I met Sam actually through Twitter, which is awesome. And Sam is a Bitcoin analyst at Swan Bitcoin. Prior to diving down the rabbit hole, Sam was actually a physical therapist, which I think is an interesting kind of overlap there as well. Sam's written a handful of pieces for Swan on the Lightning Network, the bearish case for bonds, which I know Josh would love. And then one that caught my eye and we'll likely chat through today, which is Coinbase and the Insider Exchange dump. I really enjoyed this one. So Sam, welcome to the show. Great to have you.
Thanks, guys. Appreciate it. Excited to be here. Excited to talk about some Bitcoin, but also the markets in general. It's been a pretty wild ride in 2022.
For sure. And I think the first place to start is anytime you do like content, right? You don't know who's listening or watching and like where they come at the topic from. So I know it's super basic and you get to talk about Bitcoin all day, and write about it and think about it. But let's get some basics covered first. If you had to succinctly describe what is Bitcoin to you and like, how do you explain to someone that's like just trying to get their arms around it?
Well, I think it's important to just understand your audience when you talk about Bitcoin. So it kind of changes with each person. If they don't really have much of experience in financial markets or don't have a high amount of financial literacy, I kind of just explain it like digital gold because people can kind of wrap their heads around that. So I kind of just say it's a store of value, it's scarce, can't change it. And so this thing has historically held its value over long periods of time. And it's a good way to just kind of diversify a portfolio outside of stocks, outside of bonds. And so that's kind of how I explain it to somebody really basically. And then if I'm explaining it in a more complex way, more technology way, I kind of get into its properties. So I explain, nobody can control it. It's a decentralized ledger and it's kind of resistant to censorship. It's resistant to seizures and it's very liquid and you can hold basically all your wealth in your head if you want to. And so kind of get into more of the properties of what this thing is and what it can enable somebody with their wealth. So it kind of just changes by again, the audience that I'm speaking to. But those are kind of my two go-tos, is just kind of explaining the properties of why it's an important technology and then also the digital gold. People seem to wrap their heads around it easily when I say that.
Yeah. So Sam, what do you see as like for a newbie kind of coming into the space? Like, what do you like? Where would I start learning about Bitcoin, and where would I start, trying to come up with, whether I believe it's a good investment, and we'll kind of get into like whether it is a good investment and more of the deeper conversation. But just again, kind of expecting everybody to be starting at a 101 level here. Like, where would you say like, hey, where can I learn about this stuff? Like, what are the best resources people to learn from? Ideas, etc.
Yeah, I think it depends on how you like to digest content. There's a lot of great podcasts out there. Like I love the Investors podcast. I love the What Bitcoin Did podcast. What Bitcoin Did actually did a whole 13 episode series of Bitcoin for beginners where they kind of break it down. So if you're a podcast fan, definitely point you to those two. There's specifically a good episode with the Investors podcast with Robert Breedlove, where he talks about just kind of misconceptions, but it turned into a really good Bitcoin 101 episode. Now, in terms of like blog posts, articles, I always point towards Vijay Boyapati's The Bullish Case for Bitcoin, which is about a 40-minute read, but it's a really good Bitcoin 101, like what is money, how it kind of fits into the history of money. And I think that's just a great start. If you're more of like a, finance guy, I love this piece that Fidelity put out called Bitcoin First. It's a really good Bitcoin 101 report. You can find it on their website. And so there's a lot of different ways to do it. You can also just go on Twitter and start to follow people in the industry and just start to learn slowly from them over time. And it's really kind of a grassroots movement in terms of the information and the educational resources of this asset. So there's a lot of different ways to learn it. I also like the documentary on Netflix called Banking with Bitcoin. It's just an entertaining, really accessible for somebody who doesn't understand this stuff but it's kind of fun, and it's on Netflix, so you can just check it out.
Yeah, I love the fidelity piece that you reference, and I share that with a lot of folks that are maybe more the traditional investor, like to read through and understand that. But what it does, and it kind of leads into the question that I had, is when you think about it, and maybe when you describe things to people, what do you think are the differences between Bitcoin and then the broader kind of crypto world, crypto assets, however you want to describe it? Because I think so many people think of them as the same thing. And Fidelity, part of the reason why I love that piece is it does a great job at explaining, hey, these are separate things. And I certainly have my own thoughts on what that looks like, but I would love to hear kind of your opinion on what the big differences are between Bitcoin and crypto.
Yeah, it's kind of a tricky thing because I think there's a lot of conflation between Bitcoin and the rest of cryptocurrencies. But they really are different, and they really have a different history, different assurances, different engineering, and different security practices. So I think there's a lot of more risk in these other cryptocurrencies from an operational standpoint, security standpoint, and regulatory standpoint. And really, the difference between Bitcoin is it's the very first one. And so you can't replicate that history of being basically the invention of digital scarcity. And it really is truly leaderless. Like there's no foundation, there's nobody that can exert outside control and change the rules of the protocol. And so that was this big thing that Bitcoin solved was, we need to create a system of money that could not be captured or corrupted by anybody. And so what really separates Bitcoin is it really is truly decentralized and censorship resistant. And all these other cryptocurrencies that say they're decentralized, well, there's a prime example of Solana where you could basically just pause it unilaterally by the team. And that in itself, that action of being able to halt the blockchain or change it without any of the user's input is the definition of being centralized, not decentralized. And so Bitcoin really is decentralized, and then you can't replicate its immutability and its history. It's never had a hack. Period. Now, all these other cryptocurrencies combined have had $2 billion worth of hacks. And so they're inherently more insecure. And so all of these things together kind of show how Bitcoin is different. And then the other major one is the energy component, where Bitcoin uses a consensus mechanism called proof of work. And it's backed by miners that use energy to secure the network. And a lot of these other cryptocurrencies use a different consensus mechanism called proof of stake, which has different assurances, different securities, and different kind of trade-offs that aren't really mentioned. But it's one of the things that really separates Bitcoin, and I believe it's a feature and not a bug, is that it has a big energy component and uses electricity to basically create a fair playing field for all the players in the mining game of Bitcoin. And so all of those things together is what separates Bitcoin from all these other cryptocurrencies.
Yeah, and actually, you brought up a good point, and this is, I think, something, especially for the novices out there, that gets a lot of heat in the media. But you mentioned the energy consumption aspect of it. It's obviously got a lot of bad press for being not environmentally friendly. How would you sort of rebuttal the environmental friendly aspect of the energy component?
Well, I would just first say that I think it's kind of blown out of proportion, like how small of amount of energy Bitcoin uses in terms of the global energy production. We're talking about a fraction of a percent of the energy that's actually wasted. Since 2019, we've actually, as a world, has produced more energy than we can even consume. And so we're actually just wasting energy right now. And so it's not like we can use this energy for something else. We don't have the infrastructure in place to even use this energy. And so I think, the media really blows this out of proportion. And then it becomes a philosophical question of, do you think a money that can't be censored, can't be controlled, and has an absolute scarcity, do you think it's worth the energy to have that? And I would say absolutely. If you look around the world and you have increased censorship, you have increased capital controls, you have seizure of assets. Canadian trucker protests was a prime example of that in the West, but that's really common around the world. And then you look at, obviously, inflation that's eating away at people's savings. And to have a money that can't be corrupted or debased in this kind of environment, I would say it's worth every single watt to have this technology and to support this technology. And the energy is a critical component of it. It literally would not work. It would not be secure without its energy uses. So it's not like a thing that you can just switch over to a new consensus mechanism like some people would lead you to believe. Bitcoin's energy use is fundamental to its use. And so I would just say that really that whole argument, it's more of like a philosophical question. And then the last part is, you think about, should you tell somebody what to do with electricity that we pay for with our utility bills? And, are you going to tell somebody who uses electricity, they play video games all day, or they use Christmas lights, they want to use Christmas lights all day, you're going to knock on their door and say, like, you can't use that, that's a waste. And so I think it's really not even like moral to tell people what to do, or that's not good for you, so you can't do it. We're going to stop that. So I think there's a lot of kind of misunderstandings around it. And then it's kind of just like, why would you feel comfortable telling somebody else how to use electricity when that's never existed before? And so those are kind of three different points, but that's kind of where I'll leave it. I wonder what you think, Josh.
Oh yeah, no, and I think we're at a weird stage of our, I guess, philosophical cycles that the world goes through, where, there's a lot of moral high grounds on either side, where they will tell you what to do in one way, shape, or form, whether you want them to or not. And I think we're seeing that on just with the sort of split in the world. But I personally agree in a lot of ways, where I think, like you said, the consumption is what actually part of what drives the value, and the fact that you can't just have somebody burn enough energy to really take over, and it just wouldn't be sort of viable. And I think there's a lot of creative things coming out, which you probably know significantly more about than I do, but like the geothermal stuff like that, using excess methane to run miners and things like that. So you're just capturing, like you said, the wasted energy, or like even stuff that wasn't even kind of going into energy, was just waste on part of the process to even get the energy. Being able to tap into those sorts of things and just actually minimize the waste, I actually think is a net positive for using things like Bitcoin miners, to capture some of this energy. And, frankly, I think if there's money in this excess energy, from an environmentalist perspective, if there's this much money relying on the energy usage for Bitcoin, you can be damn well sure that people are going to come in and say, hey, how can we capture this energy more efficiently?
Yeah.
And drive costs down, drive efficiencies. Like, that's going to happen. Money flowing into something always leads to innovation. And you're going to see innovation and efficiencies come into the energy development market at some point, or extraction market, or whatever you want to call it. So, I mean, I think we're already seeing the sort of tip of the iceberg there, but it's obviously a new thing, and some of this development takes decades. But I mean,
it's definitely a more nuanced take too, right? And I agree with you. I agree with that. I think there's a knee-jerk reaction to see something and be like, oh, it uses the amount of energy of a small country, right? So then you're like, you hear that and you think, oh my God, that's so bad. But then really it's just kind of like a faulty comparing apples to oranges, and doesn't take into account all these good things that it can bring to kind of help us transition into a more efficient, cleaner energy world. And we're kind of seeing that. Like, we saw the Texas grid under pressure this week from a heat wave, and Bitcoin miners basically flipped off and provided that power back into the grid. And you don't see any other kind of load being able to flexibly move up and down at one call to provide that power back. And I think we're really going to see this integration of the electrical grid and Bitcoin miners. And in time, I think people will see that this is pretty useful technology.
No, for sure. Well, kind of shifting gears, and I don't want to steal a question from you, Isaiah, but circling back sort of to the novice piece, and I think the environmental component, definitely helps clear up some of the air for people that are new into the Bitcoin space. But also, I mean, it's something I deal with all the time, and I'd love to hear your feedback and kind of how you present these situations. But I mean, like, my dad's a primary example. Like, brilliant man in every way, shape, and form. But he hears the word Bitcoin and he's like, not in my day. So like, how do you kind of like approach like the people that are savvy, that could be potential, like, Bitcoin could really change their lives? How do you approach those conversations to try and persuade, sort of what's called the unpersuadable?
Yeah.
Especially people that don't understand the technology.
It depends if they're open-minded or not. I've kind of like learned that people need to come to this thing by themselves. And in a lot of ways, like, I'm not saying it's a waste of time, but there's a lot of people who are open-minded who really want to learn about this stuff. And I don't have enough time to like sit down and try to convince some stubborn guy who's very smart, but just doesn't want to think about this stuff and doesn't want to actually do the work and research it. And so I'm not going to say I just ignore them, but I've kind of learned over the years that like my time's better spent trying to not convince, but just educate people who actually are interested in this. To answer your question, usually I just try to find what's the bottleneck here? Like why are you so resentful towards it? Why do you think this thing will fail? And I think asking that question kind of leads me down, okay, is it that it doesn't have intrinsic value, quote unquote, or is it the energy component? Like, can we just have a conversation and try not to sound like I'm trying to convince them to buy it, like I'm trying to sell them or something, but trying to just wrap their heads around why this thing is an important technology and why it can be useful. And it's useful today, maybe not in America, but around the world. And so maybe if they can just kind of see from a different angle or a different perspective and just kind of learn about like how are people using this today to help them escape authoritarian regimes or hyperinflating current local currencies. And that is happening today. And I think once they kind of wrap their heads around some of the use cases, they're like, okay, I kind of see why, maybe I'm a little bit open. Maybe I'll open a book now or something. So it's really just kind of meeting them halfway. I think I've learned just not to try to cram stuff down people's throat as much, just kind of being accepting of other people's views and understanding that they come from different walks of life, and just trying to teach them and learn where their bottlenecks are.
Gotcha.
I would just ask your dad, like, what is money? That's my favorite question to ask people when it comes to Bitcoin, and just have him describe to you what is good money and like, what's the history of money been? And I think part of that comes from like one of my favorite resources, which is the Bitcoin Standard by Dr. Saifedean Ammous, which is to me what fundamentally changed and led me to dig deeper into Bitcoin was reading that book in 2019. So that to me seems like the best spot to like understand, like ask like, what is money? And to Sam's point, I would agree. Like there's certain people and there's advisors, Josh, that we know, right, that I will friendly talk to, debate on Twitter or go back and forth, and they just aren't open-minded. And it's like, you're just pounding your head against the wall, and it's stupid. Like, why waste time? It's not worth it, because they will never concede that it makes any sense, no matter what you say. So I think there is some truth to that. But I like that question of like, what is money? Because if we spend all our time going to work or saving to have this thing, like what actually fundamentally is it? And I think that's a really good question to kind of start with and wrestle with a little bit. That's kind of
the door to the rabbit hole. And it's funny how little people understand about money when it's such an integral part of their day-to-day business. Pretty much all the decisions they make, right? They go to work, they get rewarded in money, but a lot of people don't hold the dollar bill and just think about like, what is this thing and what's its actual purpose? And that kind of leads you down the rabbit hole of Bitcoin and the history of money, which you're right, Isaiah. That's the question. That's why Robert Breedlove has his podcast show, What is Money? Because it really is the question that kind of opens up a lot of doors and gets you thinking about this stuff.
Yeah, and I think opens a great question. Like, because I think the argument of like, what is, obviously we think Bitcoin's better version of money or better version of gold, or, and has similar intrinsic values to both of those things, depending on how you argue it. But one thing that I know Isaiah and I deal with all the time is, we spend a lot of time trying to convince people to invest in things that have intrinsic value, like businesses, et cetera. And then, we're over here arguing that, hey, Bitcoin has intrinsic value because people give it intrinsic value, so it's just kind of a different mindset a little bit. And I think that can sometimes be hard for people to wrap their heads around. How do you sort of view it from that lens of like, okay, talk me through how Bitcoin has an intrinsic value and is worth investing in over, say, or part of your allocation over, say, just holding cash or holding, things that may have more intrinsic value, quote, quote, such as like owning a private business or stock market. Like, how would you justify it from that perspective?
Well, I would just start off by saying, Bitcoin's money and those are equity cash generating businesses where, I don't really see the whole intrinsic value or the subjective value of Bitcoin. I think Bitcoin is a monetary good that is competing on the free market of money based on its monetary properties. And I think it performs the function of money, given its properties, better than everything else on the market. And so when you look at Bitcoin, it shouldn't have a yield. It shouldn't be backed by anything because it's money and it stands alone on its own properties. And so by properties, I mean those like divisibility, fungibility, scarcity, ability to transport it, all these things Bitcoin kind of checks those boxes better. And then if you think about like, what is money? Okay, we can kind of go down here. It's used to facilitate trade, and it's used to take present work and preserve it into the future over time. And I believe that Bitcoin does that better than any other kind of money out there. And so it doesn't necessarily have to have intrinsic value or something to back it like some of these other assets, because Bitcoin is money. And so I think that's kind of like a confusing part with people, because they kind of see these assets as similar, but Bitcoin's not competing for liquidity like these other assets. Bitcoin is trying to be the liquidity. And so it's just like a fundamentally different thing that people need to kind of wrap their heads around. But that's yeah.
Oh yeah, sorry to interrupt them, but I guess what I was trying to get at is like you hit on that, like there's that dichotomy of like it being an investment, but also being a liquidity transaction. So like some of the argument that we're, trying to present to clients is, buy and hold Bitcoin. But then, the whole use of it is to be cash, like to be used, in a nutshell. Like that's kind of the mental model there. So, I mean, that's, I guess, what I'm arguing. Like, so how do you get around that kind of idea? Like, hey, let's buy and hold this as a store of value, even though it's supposed to be a better version of transaction cash. Does that make sense?
Yeah, I think it really goes into like where it is in its adoption cycle, if it's monetization. Like we're really early, and people are still hoarding it. It's still gaining value pretty rapidly over long periods of time. And so it goes back to like hoarding right now. But it would be kind of silly to not use the worst cash to spend on things today and to hoard the better cash. Now, as Bitcoin increases in value over time, it'll become a greater and greater percentage of people's net worth. And so over time, more services and infrastructure will be used, because as this thing grows in value because of its deflationary nature, we should see it more and more be used as a medium of exchange. Now, I think we're early. I don't think it's going to be used as cash 10, 20, 30 years, because we got to wait for this adoption to occur and its value to go up and become a greater percentage of people's overall net worth in their portfolios. And so I think it's just a matter of where we are. We're not going to wake up tomorrow and everyone's going to use it as cash. It's going to be a slow adoption cycle. And over time, I expect it to be used as cash. But I mean, I just hope I'm like alive during that time. I hope it doesn't take that long. But I think that's kind of where we are. And so kind of explaining now, like, you can say it's like an investment now. Do I really say like I'm investing in Bitcoin? No, I think the proper terminology is I save in Bitcoin because it's money, but it's just this deflationary money. And so it's very different than what we've ever had before. So that's kind of how I see it.
One of the pieces that Sam referenced earlier, I think does a really good job, which is Vijay Boyapati's The Bullish Case for Bitcoin. It talks about the monetization of an asset, because we've never seen it, right?
Yeah.
No one living has ever seen anything monetized. So it goes collectible, store value, medium of exchange, unit of account. Unit of account is when we walk into the grocery store and it's how many sats for, our chicken breasts, right? We're not there. To Sam's point, like, we might be old and gray and going in and using our, mobile wallet to pay for stuff doing that, but it's going to take some time. And I think for a lot of people, Josh, it is hard to kind of see it as both the investment use case and money, but that is
right. I get
ultimately
a lot of pushback on those conversations. And that's why I'm curious to kind of hear.
Well, and the way that I would answer it is, okay, just think of it purely as an investment, right? So scrap the money thing. Who gives a damn? F that. I just want to make money, number go up, right? So just look at it like that. And I wrote a piece that we can link to for CoinDesk. It's like, okay, you take your typical 60-40 portfolio, carve off 5 from stocks, 5 from bonds, your performance goes up and your risk stays the same. So like that's additive, even if you don't believe anything else with Bitcoin. Now, again, I think you should learn about it. I think you should think about it more than just that. And that was using a proxy of GBTC, which is the Grayscale Bitcoin Trust, which is not the best way to hold Bitcoin, but it has the 2% management fee and has the net asset value that can float around versus owning just spot Bitcoin. But if you just want to look at it from an investment standpoint and you run the numbers, having Bitcoin rebalancing and moving that as part of your asset allocation still is additive. And you can say, I don't even worry about the money stuff till way later.
So Sam, in terms of like, so kind of along that lines, like where do you see the future of Bitcoin? Like, let's call it 5, 10, 15 years. Obviously we're very early in the cycle and there's got to be, a lot of changes across the board. But where do you sort of see that cycle falling, both from like an investment, asset appreciation perspective, but also just from like an infrastructure technology perspective?
Yeah, I mean, it's always tough to kind of forecast this stuff, especially because it is new. We haven't really seen something like this before, and it's really difficult for two reasons, I think, as well, which is Bitcoin's a technology, so it does grow exponentially. So I think me saying 10 years might sound crazy because it could happen faster than that, because technology really grows exponentially. It's really hard for humans to kind of wrap their heads around this kind of growth that we've already seen in Bitcoin. I mean, it's literally gone from one user to now an estimated 46 million American adults hold it, but there's probably more than that globally, right? So but going from one to that in 13 years, and that should continue to move exponentially. So I see a lot more users. And the reason why mostly is because you look around the world, like I said, and fiat currencies are depreciated at an increasingly rapid and unpredictable rate. And that is the when money is a zero-sum game, you have to sell dollars to buy Bitcoin. You have to sell yen to buy Bitcoin. And so if those currencies keep losing value and there's this exit valve, it's really a function of the environment around it. And I think more and more people are going to find out why Bitcoin's valuable for the fact that you can't debase it. It holds its value. One Bitcoin equals one Bitcoin. So there's nobody making more of this thing, where all the other local currencies are falling at an increasingly rapid rate. And so they're going to see their people who have Bitcoin and they're like, wait a minute, like your purchasing power isn't being diluted like mine. That's interesting. I'm going to own some of this. And then the other component that I really think it's lost on people, especially in America, is the censorship resistance and difficult to seize this asset. And I think as this world kind of unfortunately gets a little bit more crazy and there's more financial warfare happening left and right, people are going to want part of their portfolio in this asset that can't be confiscated and can't be censored. And I think those three things could really spur up adoption. So it depends how the world kind of plays out. Bitcoin adoption could be very rapid and it could happen gradually, then suddenly. And in 5 years, we could be talking in a completely different world where Bitcoin is adopted by hundreds of millions of people across the world. Now, if governments decide not to embrace it and decide to fight this thing and ban it, there could be a period where this is a lot more delayed than I think. Now, will they kill it? Can they kill it? I don't think they can. And so whether that adoption happens in 5 years or 10 years or 15 years, I think Bitcoin's still going to be around and people are still going to find value in it. Now, it could just get delayed by I guess these governments who try to kind of hold on to their power. But that's kind of like a long-winded answer, and I wish I could give you more. But I think that maybe in 10 years, we'll probably start to see Bitcoin start to be used as a medium exchange, like kind of what you were talking about before. Right now, we're in the store value time. I think by 2030, I expect Bitcoin's price to be a lot higher, and I expect adoption to be a lot higher. And I expect maybe people start using it for large purchases and maybe purchases online as the fiat currencies around them keep losing value at an increased pace. So I'll give you that. I'll give 2030. I think it's going to be higher in price, more users, and probably being used more of a medium exchange.
Does Swan have like a price target for what they expect Bitcoin to be?
My boss is big thing. He always says 1 million by 2030. That's his price prediction. But we're more focused on number of Bitcoiners go up than price go up. Because we think the properties of Bitcoin kind of speak for themselves. It's really just an education problem right now. It's just a information asymmetry. So we're trying to get 10 million new Bitcoiners. And by Bitcoiners, we mean people that store a decent amount of their net worth in this protocol and who actually understand how to use it, and not just somebody who just bought $20 on Coinbase. And so we're trying to get to 10 million Bitcoiners is our goal. And then, Corey's price prediction is 1 million by 2030.
He's sandbagging. Only 1 million by 2030.
Who knows? I don't really like price predictions because they're always wrong. I've been around here for a while. It's
totally.
Nobody knows.
I can remember $800,000 by the end of 2021 being thrown out at one point, and I was like, man, that's aggressive.
There's a couple models out there that got a lot of attention that were built on some flawed methodology.
you mentioned Coinbase. I wanted to reference the piece that you had, because I think it's really interesting for people. Again, trying to delineate. And I think this is where also like Bitcoin can be something that people will be Bitcoin only. They might own different things. And again, this is not necessarily the show to say you should do one versus the other, but I think it's going back to the education piece, which I know you and the folks at Swan do a good job at. But you did the piece on Coinbase and the insider exchange dump. And Corey, who you were talking about, the CEO, he was on a podcast recently. I think it was on the What is Money show with Robert Breedlove, but he hit at a stat that there was only one crypto asset after hitting an all-time high in Bitcoin terms that did it again 3 years later. This blew my mind. Josh, do you know which one it is?
I would guess. No, I don't know. Not off the top of my head.
Elon Musk is your hint.
Dogecoin.
Yeah. So it's Dogecoin. So hit an all-time high and then 3 years later hit another all-time high measured in Bitcoin terms. I think that's always the joke where I'll like poke people, like just measure it in Bitcoin, like make that what you measured in, not in dollars. Yeah. But you wrote the piece on Coinbase and I thought it was really interesting. You did a really fantastic tweet thread, but can you kind of, I guess, summarize a little bit or walk through some of the findings? Because I know one of the big issues that you saw was like Coinbase's top 10 picks, they didn't even have Bitcoin in there. And Bitcoin is by far, the biggest asset in the space. It's like, why would you not have it be there?
Yeah, it's kind of strange because, if you look at their SEC filings, Bitcoin still makes up about 50% of their revenue and trade volumes, but they have very little marketing and educational resources towards this. And it's because they have kind of warped incentives at Coinbase where they make money off trading fees and they make money off of listing fees when they have a new coin come in. And so they're kind of incentivized to list these inferior technologies. And then they don't want people just to buy and save, which is the only way, and personally, I think where most people should be doing with this very volatile asset is just buying it, whatever they can afford a little bit and saving it for the long term. To try to trade this thing, I mean, you just trade yourselves into oblivion. But Coinbase loves that because they get all the trading fees. And so I think that's why you don't see a lot of education around Bitcoin. And then if you know about these other coins, and this is the difference between Bitcoin, is it was really a grassroots movement. It was worth nothing. There was no such thing as a cryptocurrency before Bitcoin. And so it was literally worth less than a penny. Anybody could, with their laptop, could have opened up and mined it. It was very fair distribution, about as fair as you could get. I don't know how else you would do it. And that's what all these founding teams are figuring out. And there's this game where you have a pre-mine. So you get some VC investors, they invest in a development team. The development team makes the token and they get initial, allocations, the VCs and the team of these coins before it ever hits the markets or it's available to the public. That's why it's called a pre-mine. Now, the goal of these tokens, I don't think it's to revolutionize anything. I think it's just to get listed on one of these large exchanges where they could dump their insider allocations on retail investors. And when you look at the data, by the time they're listed on Coinbase, all the charts look the exact same for these 160 coins listed on Coinbase outside of Bitcoin. There's an initial spike, and then it drops about 90%. And that's the insider exchange dump. And these VCs, you can track the coins, you can track the wallets. And this is literally what's been going on. And I really put a lot of the blame on the SEC and on the regulators who we've tried to talk about how these things are more like securities. It's not like I'm looking for regulators to, I believe in the free market, but when I see these retail investors just getting slaughtered year after year after year, and there's no kind of penalty. There's nothing from the regulators about this stuff. It really bugs me. Because really what it comes down to is the marketing, where you don't hear any of the trade-offs or the risks of the differences between Bitcoin and these other cryptocurrencies. And the Isaiah, the piece that you were talking about, I looked at every single top cryptocurrency at each cycle top. So there's been like three major tops. There's 2013, 2017, 2021 now. And I looked at all the top cryptocurrencies besides Bitcoin at the time. And you're right, there's three cryptocurrencies that have made cycle to cycle Bitcoin highs. And one of them was Dogecoin, which was just pumped by celebrities. And now it's back, down 90%. So, but it did make a second high after it got pumped by Mark Cuban and Elon Musk. The other one was Binance Coin, who is right now being accused of being an unregistered security by the SEC, very centralized, pumped by Binance, the foundation. And then the other one was Ripple from 2013 to 2017, who's also under currently investigation for a $1.8 billion unregistered security offering. And so those are the only three out of all the cryptocurrencies in history that have ever made second Bitcoin all-time highs. And so what should you be educating clients about is this fact, and the fact that only Bitcoin has shown to be able to hold its value over time because of its scarcity and its property, its security, its decentralization. It's difficult to change. All of these other cryptocurrencies are one-hit wonders. They pump up for one cycle, and then they're just completely forgotten about. And then a new wave of cryptocurrencies come in. Everyone who was burned at the last cycle is gone. They learned their lesson, brings in a bunch of new people. They get burned by the next ones, and then it repeats and it repeats and it repeats. And so that's kind of what I was trying to show in those data about the game that's going on here, to try to basically self-regulate and protect retail investors. Like, I guess it's up to us to do that.
Yeah, I think that's been one big fallacy of like kind of the crypto market, whereas because it's like, things like Coinbase are, shiny and polished and from the tech community, there's this sort of mentality that it's no different than just traditional banks or Robinhood, which I can go on my own tangent about the evils of Robinhood, but there's this sort of belief that it is regulated because it's, polished, or I guess it's like social proof that it's regulated, But with that, I mean, something that I know I've been keeping a close eye on, I'm sure Isaiah has as well, is in the regulation space. I've been mostly focusing on it from like a tax perspective and just kind of looking at, changes to tax codes and stuff around adoption of crypto and Bitcoin. So, I mean, we definitely see a lot coming down the road in that space, but I'd be curious to see kind of the things that you're aware of that are coming or potentially coming from a regulation standpoint, and then how you think that will affect both the crypto markets as a whole and then more Bitcoin specifically in terms of, trying to get that 10 million person adoption, or just in what it could look like from a tax perspective or investment perspective and sort of protecting consumers.
Well, regulation in itself isn't a terrible thing, I don't think. Like if it's responsible and it doesn't stifle innovation and it protects consumers. Now, I don't really have a lot of faith that they will be responsible with it. But I think what happened,
tons of faith in the government, tons of faith.
Now, I think like this recent debacle with Terra Luna, this algorithmic stablecoin that wiped out about $50 billion in value in a matter of days. They've really been focused on stablecoins because stablecoins, I would say, they think are the bigger threat right now to their US dollar. And they don't think that these private companies should have the ability to issue, currency and basically hijack the credibility of the central bank by pegging it to their currency. So they really don't like stablecoins. And then this whole debacle with Luna just gave them everything they needed to come down. And so I think we're actually going to see swifter regulation come down now. And they have a lot of good causes and a lot of examples of why that needs to happen. And then all these other cryptocurrencies, in my opinion, like I said, they really fit the Howey tests. A lot of them do. And I don't want to name specific ones, but that's where Bitcoin really separates itself. And Gary Gensler has been very clear. I mean, he said it's a commodity, and the CFTC said it's a commodity. And I think it is a commodity. I think it really fits the definition of a commodity. And so I don't think the regulatory risk is nearly as high for Bitcoin as all these other ones. Now, where I see some regulatory risk with Bitcoin is the energy narrative. I think there's a lot of misunderstandings around it. I think there's a lot of social pressure around climate change. And will they be smart enough to actually not stifle this innovation that I think is actually one of the most important innovations in the energy industry that we've seen in a long time to help us get to that cleaner climate change, like that transition to get us there. But that's where I see maybe some headwinds for Bitcoin from a regulatory perspective, but it's nothing like these stable coins or these other cryptocurrencies. And so I think the regulation's done right. It can be good to protect consumers and kind of stop all this nonsense and some of these scams that are really plagued this industry and given us really bad rep. And then hopefully it gets cleaned up, and then people will still see Bitcoin because Bitcoin won't change. Bitcoin doesn't change. So it will survive any of this regulation. And I think people will wake up the more this goes on, where Bitcoin stays the most liquid and the most secure every single year, and all these other ones kind of get wiped out and they get regulated out of existence, whatever it is. people really start to see the difference of Bitcoin more. But right now, again, they still kind of conflate it all.
Gotcha. I was gonna say, there's a really good piece talking about like just the energy narrative that Swan did. And I'll give you guys a plug. The Green Machine, I think, is the name of it. And we'll put it in the show notes. It's an excellent, I think it's like 30 minutes on YouTube. And it's really, really good. It kind of walks through that kind of idea and showing and explaining how the energy narrative has been framed very, very wrong. And like, hey, here are some of the actual, pieces of information that back up some of the claims that are made. Cause I know as well, saying like on Twitter, like you can have people that will make crazy claims and you're like, where's that from? Right. Like, oh, just trust me, I got it. Right. But there is a lot of data that you can go out and find, I think, supports the energy narrative. And the other one is compared to what? Like, what are you comparing the energy narrative, like the energy consumption to? Are you comparing it to gold mining? Or you compare it to traditional banking system? Are you comparing it to, Christmas lights, like you talked about earlier? Like, what are you comparing it to? And I think that's super important for people to understand the frame of that. So
yeah, and I think it's just education. Like the articles that are critical of Bitcoin's energy usage, I would just like, a lot of the times I just kind of sigh because they just really show a fundamental misunderstanding of how Bitcoin works. Like they'll do per transaction, and that's where a lot of these articles talk about its energy consumption, per transaction. I was like, that's not even how the energy is consumed or generated in Bitcoin. It's really generated on the mining and the issuance of the coins, not the transaction. There's no energy, spent when we send a transaction on Bitcoin. And so a lot of these articles are just flawed methodology. Like they just don't even use the right methodology to calculate the carbon footprint of Bitcoin. And they really confuse the computer servers with where the energy is generated. And there's all kinds of flawed metrics that they use based off this guy, Digiconomist, whose model, I mean, to give you an example of how stupid this model is, that every single one of these papers reference on Bitcoin's energy. When China banned Bitcoin mining, the hash rate dropped by 50%. In this guy's model, when all those miners went offline, so 50% of the hash rate is literally offline, that guy's model, the carbon footprint went up during that time frame. And so that's just like disconnected from reality. It's literally nonsense. But that's the metric that all these critical, environmentalists use against Bitcoin. And again, that's why I think it's just an education thing, because I think the truth does get out eventually, and this nonsense kind of gets brushed to the side. But yeah, it's kind of exhausting because it's always the same study, the same metrics that are kind of flawed, that are used to kind of slander Bitcoin. And so, yeah, it's a fight, but it's just education. That's honestly how I see it.
Well, we see the opposite all the time on the, from the environmental side, like environmental protection side, where like I have this argument in a different technology, but like electric vehicles. Most people just look at the data from, my car runs on electricity, which uses less of a carbon footprint. And it's like, yes, that's accurate. But electric vehicles start with such a high carbon debt compared to a gas vehicle, that any like electric vehicle that's 400-mile range or so, like the break even mileage to pay off, like to be better than like a Honda Civic, for example, you have to drive like 300,000 miles over the course of the life for it to be more carbon efficient than a Honda Civic. Because it starts with such a high debt building those batteries. But like, that's the data that people forget, same with like Bitcoin. It's like, you just have a misunderstanding of how the energy actually has gone into this technology. And it's just basically good marketing for politicians or whoever, that
it's complicated too. I mean, I try to give them some leeway, and nuance is kind of getting lost in this world that we have today, especially on Twitter.
Yeah,
just a lot of people talking past each other a lot, and that's why I just think over time more and more people will learn about it and take some time. At least I hope so. But you're right. These energy topics specifically, they're just super complicated, very nuanced. The energy industry is just extremely complicated, so it's a tough thing to wrap your head around.
Yeah. I want to ask one question, kind of circling back to what you mentioned earlier about so the exponential growth component. So I really want to hear kind of what your plans to get that 10 million, and kind of the thoughts, philosophies of how you see that evolution developing, for the consumer, and how consumers can more easily get involved. But to your point about like exponential growth. I have this anecdote whenever I'm trying to explain Bitcoin, which I think is super valuable, is like, I remember back when I was in high school, which granted it's been like 20 years at this point, but in the scheme of technology, 20 years is not that long, right? Or scheme of life, not that long. But I remember like being told in a classroom that the next big technology was going to be mobile phones and that everything was going to be on mobile phones. I was like, nah, that's bullshit. And, 3 years later, iPhone comes out and the rest is history, right? I sort of see something similar happening with Bitcoin where like, I can't remember a time really without iPhones and being attached to my phone every day. I think 5-10 years from now, we may be that exact same way with a currency, especially like Bitcoin, or I actually sort of have, beliefs about like what we're going to see from an economics perspective about pegging against Bitcoin and, more involvement there. But yeah, I'd love to hear, kind of thinking along that exponential growth and exponential, like, how are you guys like within Swan trying to achieve exponential growth with like the consumers and getting more people adopted? And where do you see like the opportunities there?
Yeah, I mean, there's a couple, like, first off, I'll just say, again, not to be a broken record, but education is a big part of it. And that's what we focus on a lot at Swan. But that's also like right now, the industry is still maturing and there's a lot of infrastructure and tools that need to be built. And so we're very early days. And so that's definitely a part where Swan can help. Like, that's why we're building, a Bitcoin only platform for financial advisors. Like, people need these tools to interact with this asset and this monetary protocol. And so as the industry matures and there's better tools and there's better infrastructure, I see that helping the exponential growth of the technology. But then, what I would say is that it is just a superior way to move value. I mean, anybody who has tried to send a wire or done any of these things knows how amazing it is when you just can click a button and it really is peer-to-peer, and you can use Lightning and send it a fraction of a penny in fees, and you can send a ton of money in a second. And then if you know anything about the cross-border payments in the system and how many problems there are, delayed and high fees, I mean, this really is just like a superior technology. And I like to think about email similar to what you said with mobile phones. In email, it was estimated that 10 million people used email in 1997. And it was obviously better than the traditional mailing system, like for obvious reasons. And it still took, 10 years later, now over 1 billion people use it every single day by 2007. But it needed that time for people to understand why it was good, that it was secure, that it was safe, that that they needed the infrastructure as well. The internet, was dial-up, AOL in the mid-90s. A lot of improvements with the infrastructure by 2007. Now everyone's using email because it's just better. And that's what I think is going to happen with Bitcoin. It's just a better way to move value, very secure, it's faster, it's cheaper. And the thing about it is it's software. So it can actually just constantly improve upon itself and upgrade itself. And that's kind of what we're seeing. We just had a major upgrade last year, Taproot, that makes it more private and makes it more efficient and adds all kinds of functionality to Bitcoin. And that should continue as well. So, I think we can help at Swan with education and building tools. And then I just think this technology stands on its own, and we're going to see similar S-curve adoption that we saw with the internet, that we saw with electricity, mobile phones, any kind of revolutionary, not to use that word, but like technology, it grows, and it's just a matter of time before more people kind of understand how this thing could benefit them, essentially.
Yeah. So, and obviously, and something we haven't really talked much about on here, like Swan does make it super easy for both advisors and consumers to kind of get involved with Bitcoin in terms of like, I mean, you guys do the daily transactions that just sort of accumulate like Acorns or any of these other companies that sort of do the rounding, like, hey, I can't do $20,000, coin as it is today, but I can do, $5 partial coin. Makes it much more accessible to a lot of consumers and, a much easier way for people to sort of dip their toe in. I think one problem with Bitcoin is that a lot of people see the $20,000 price tag and they assume I have to have $20,000 to buy Bitcoin. Yep. Whereas like one powerful thing with Swan, I think, is that, hey, you make it very, very accessible at, fractional rates, right? But one question I had, and Isaiah's probably going to roll his eyes at this, but sort of where do you see the future of kind of Bitcoin versus some of the shit coins? And like, do you see, sort of any of the other cryptocurrencies surviving in a world with more Bitcoin adoption, and one of the spaces I'm very interested in, and I don't know if you can tailor it towards sort of this area, but I think the esports, sort of evolution that's happening within like the Ethereum space is stuff is, I think, fairly interesting, as well as like what could be with NFTs, not necessarily some of the stuff we're seeing today, but some of the things that are hypothetically, in terms of like democratization of like the creative world. Like I think some of those are fairly interesting, but how do you see that those sort of technologies surviving compared to a Bitcoin and vice versa?
I think it just depends on what they're trying to do. Like if they're trying to be money, I think money is a zero-sum game, and I think they're going to lose to Bitcoin because it's impossible to compete with Bitcoin for the most important things, which are its security and its decentralization. And that's why you kind of hear a lot of these coins. They always talk about like it's faster, it's we can do all these extra things on it. And those are the less important things when we're talking about building a foundation of a monetary system. The most important thing is that it's secure and that it doesn't change. And so you have this really sound foundation of Bitcoin that is really difficult to compete. I would say it's impossible. The only way that these ones could compete is if there's something in Bitcoin. Bitcoin shoots itself in the foot. That's the only way that I could see it competing as money. Now, these other things like, NFTs and these collectibles, like it's an interesting concept, but you have to understand that when they say they're decentralized and they say these things, they're really not. And you're basically just trusting somebody else with a ledger, and you have like the rights to this stuff. But it's just like, having your baseball cards sit in somebody else's vault and then they could maybe make any more of those baseball cards if the author decides they want to do that. And so that's kind of out of your control. So they kind of, feign scarcity and things like this. And that's the difference in Bitcoin, is like nobody can ever make more of it. And if you hold your own keys, nobody can ever take it from you. And so again, with like money, no, I don't think any of these things are going to compete with Bitcoin. I think it's kind of a winner take all game on that side. But if they're trying to do something else, they might have some value down the road, but it's going to be a very small market compared to the market of money, which is what Bitcoin's going for. So the total addressable market of Bitcoin dwarfs any of the use cases that these other things are going for. And then if like the esport and the in-game gaming, I just see no reason why that can't be used with Bitcoin eventually. I just see, why would you have if you're using an in-game currency that's centralized by the team that runs the game, that they could why would you find that more valuable when you can have an actual digital money that is real and that can't be controlled, can't be inflated, that can also be in the game? I think that functionality can and will be built on Bitcoin in the future. It's just that whereas all these other currencies move really fast and they move fast and break things, like I said, we're trying to build the foundation of a monetary system. And so it's like the code of a nuclear reactor or a spaceship. You can't have one problem with when you upgrade this thing, when you try to add more functionality. If you mess up once, it's done. I mean, it's completely done. And that's the brilliance of Bitcoin over the years, is that's never messed up really once. Yeah, there's a couple of times, like maybe very early in 2011, where it was worth nothing, that they kind of had this bug. But other than that, it's been smooth sailing. And so we will have this functionality on Bitcoin, but it's just patience. It's just, it's going to take, everything moves slower in Bitcoin because everything's very deliberate, very careful with how you upgrade this code. But there's really no reason for me to believe that all this gaming and all these cool things can't be done on Bitcoin eventually.
I know we are getting close to our allotted time. Wanted to ask two kind of final questions on my end, and then I'll kick it back over to Josh to kind of close out. But what would make you change your mind about Bitcoin, as far as like if something happened where you say, hey, I no longer is the thesis for why I want to own it? What has to change? And then what is the favorite like Bitcoin book or like thing that you've read that you feel like this is what people need to go in and learn a little bit more on?
Yeah, man. What would change? I think what would change is if, like I said, if there's any kind of question around 21 million, if I can't check and verify with my node that the supply has stayed the same, that's really what everything comes down to, that there's only going to be 21 million. And so if that ever gets changed, or I feel like I can't verify that, or there's some critical bug where there's question marks about the supply and then there's some kind of fork, to me, that's a failed project at that point. And you can't trust that. And then you really can't trust any of these cryptocurrencies, because if the most secure and the most decentralized one failed, you really can't trust any of them at that point. That's why, like, when these other coins pray for Bitcoin's failure, I don't think they realize that, like, why would they trust a less secure one when the most secure one just went down? It kind of kills the whole idea. So that's kind of what would, again, like a critical bug or vulnerability, or at the actual network was hacked. Like that would kind of have me lose faith in the investment thesis, but it hasn't happened yet. So, and it's only growing more secure over time. So it's going well, but that's probably the one thing. But I can just use my node right now and check it every day. In terms of the book, I think it's not, I wouldn't even call it a Bitcoin book, but Price of Tomorrow is just a fantastic read. It's written by Jeff Booth, who's a technologist, and it's very accessible, and it's very concise, and it's really hard to refute. It's from first principles, and it's why deflation is needed for an abundant world, and how there's natural forces at play for deflation, like the exponential growth of technologies, and how the inflationary monetary system that we currently have is at odds with this natural deflationary force of technology, and how that's kind of going to play out. And it really just an interesting read. And I think it really gave me a lot of clarity in terms of like where we are in the world and where we might be headed. And I just think it's a great read. So I think I think Bitcoin's mentioned once in it, but it's a good one. It's one of my favorite books. It's the only book I read where I literally just read it again afterwards, because I was like, I need to remember this stuff. So it's a good one.
It's good.
Nice. Well, yeah. My closing question would be just, in a world where we're seeing, as of what yesterday, 9.1 inflation, and, the impending collapse of some fiat currencies somewhere in the world. Do you ever see a world where the United States or any major Western country will be pegged against the Bitcoin? Go to a Bitcoin standard, I should say.
Yeah.
Probably a better way of phrasing it.
Peg it.
Yeah.
I do honestly. I don't know when that is. I just see, where we're headed with the fiat currencies. And I think that the temptation to print is too hard to pass up. They're just human. And if you studied history, everybody succumbs to this temptation to try to print their way out of real economic problems. And I think Bitcoin's going to be there when they need a money. And it's a money that can't be debased. It's apolitical. It's neutral. And so if you're thinking about like another Bretton Woods situation where they're trying to recreate a new monetary system, they have this money that a lot of them could probably agree on. They're like, all right, well, I'd rather have something that nobody can control than China's currency. Or if you're China, I would rather have that than a US dollar that's controlled, or a monetary system that's controlled by the US. And so I do see a world that maybe Bitcoin could actually unite a very fractured world in the future because of its apolitical nature and its neutrality. And I don't know when that will be. I think there's also this idea of Thieves' Law, which is the good money pushes out the bad over time. And more people will save it. It becomes more liquid, more users. So it becomes better money because it has better price signals. So I think over time, as just the better money, it'll just continually be adopted as more people use it because it protects their purchasing power better than anything else. So I think it's kind of inevitable, but again, it's software. This is a big experiment, but then again, so is our traditional financial system since 1971.
Yeah, as I said, so is every economy.
So that's kind of how I see it.
All right, Sam, you want to shill Swan where you're at online if people want to follow you and kind of educational content that Swan puts out?
Sure. I hope this was helpful. Somebody was interested in it. We try to have a lot of different kind of blog posts on the Swan website. So you can just go to swan.com and check out the blogs for beginners and experts alike. I write a lot of stuff on there. I'm on Twitter at Sam Calla, SamCallah. I'm always posting stuff on there and charts. And then I actually write a monthly insight report, which is more very in-depth research report. And we do that for our private clients. But if you reach out to me, I'd be happy to share with you, our last issue and see if that'd be something you're interested in. And if you're just interested in learning more about Bitcoin or about Swan, always open. My DMs are open, and just like I really appreciate talking with you guys today. It's refreshing to talk to some financial advisors who are a little more open to Bitcoin. I used to go around and talk to them, and like 5 years ago, and got a little bit different reception.
No, we're familiar.
Yeah.
We've had a lot of those same conversations. Yeah, no, as you mentioned, I think, we just all have to be open-minded in this world because no one really knows the future. And, obviously I think Bitcoin has enough things going its way to, make a solid argument for it one way or another. But yeah, Sam, we really appreciate you coming on. Yeah, definitely any listeners out there, you should definitely check Sam out. Read the newsletter you put out religiously, and it's solid stuff. So he's a fountain of information. Definitely follow him. And we appreciate you sharing your knowledge here.
Thanks guys. Yeah, have a wonderful week.
You too.